let's get the latest on the row that is raising questions over the independence of the US Central Bank under Donald Trump's presidency. He's trying to fire Federal Reserve Board member Lisa Cook, something she is promising to challenge in court. Well, in the last couple of hours, Treasury Secretary Scott Bessent has called the Fed an unaccountable institution and, in an interview with Fox Business, renewed his calls for a widespread review, which would include the allegations of mortgage fraud against Ms. Cook. Well, Eric Rosengren was, until 2021, the president of the Boston Fed, which is one of the regional banks that make up the US central bank system. He's also now a visiting scholar at MIT School of Management in Boston, and we are very pleased to welcome him onto the show today. Eric, central bank independence has been considered a norm for many years. If the Fed gets politicized, what does it mean for the US economy?
So it's both the U.S. and the global economy, actually. We haven't had a situation where a large developed country that had an independent central bank has lost that independence. Mostly that's occurred in places like Argentina and Turkey. The result has generally been that in the near term, interest rates go down. It promotes the economy in the short term. But over the longer term, it results in higher inflation. And that makes it much more costly to bring inflation down once people start expecting that inflation is going to stay higher. So in the United States, that means initially that markets may take it as good news that lower interest rates may increase the value of stock prices, may cause the US economy to grow a little stronger than it otherwise would. But in the longer run, it runs the risk of much higher inflation.
And globally, I mean, you preempted my question a bit there, but what does it mean for investors in US assets?
Well, the global economy has been based on the assumption that the United States will have a central bank that keeps its inflation well contained, keeps its economy relatively close to full employment, and has a strong institutional structure. If all of a sudden countries around the world become less certain of that, and businesses and individuals, they become less willing to hold US dollars. So one potential risk is that over time, countries and individuals are less willing to hold the dollar. It has implications for what the exchange rate will be over time. And because the dollar plays such a central role, a lot of invoicing when you buy goods abroad frequently is done in dollars. So if people start being less certain about the value of the dollar over time, you're going to start seeing the US dollar no longer serving as the reserve currency, which probably means less global stability.
But I mean, so if those are the arguments in favour of independence, you've got the Treasury Secretary Scott Bessent claiming that the Fed is unaccountable. So how do you balance the needs between independence and oversight?
So most central banks do have oversight, and that's usually through the legislative process, where there's a clear remit given to the central bank. And if they don't carry that through, then you replace, in the case of the United States, the governors and the Reserve Bank presidents over time. So in the United States, that remit is that stable prices and full employment. If all of a sudden, for example, you said we want to lower interest rates to make sure that the deficit gets financed, you can no longer use interest rates to focus on inflation or employment problems. So because the central bank only has one real tool, which is a short-term interest rate, it can really only focus on either the economy, or if it's given alternative goals like the exchange rate, all of a sudden you no longer can control inflation nearly as well.
Eric Rosengren, former president of the Boston Fed and visiting scholar at MIT School of Management, thank you for joining us today on the programme.
Thank you.